Good afternoon, everyone. Thank you for tuning into Mumbai Angels Network's Reboot, Navigating the New Normal session. Before we begin, I request all of you to please keep your devices on mute to help us hear the speakers clearly. We at MA Network have always believed in leading from the front and present a seven-part series discussing key aspects of the issues currently impacting the startup ecosystem and how we collectively can take steps to overcome them. The session is divided into 40 minutes of panel discussion and 20 minutes of Q&A. Please feel free to send in your questions to us during the conversation. If you wish to address your question to a specific panelist, do let us know that. Our team will curate them and we'll try our best to get them answered by our esteemed panelists. The session today is on financial management during lockdown, where industry leaders will talk about financial challenges that they are facing in managing their businesses during the current crisis and the steps that can be taken to solve them. Our panelists for today are Neelesh Talathi, Chief Financial Officer of Pepperfry. Neelesh has over 2 decades of experience in corporate finance. Prior to Pepperfry, he held various senior positions with leading corporates like Unilever and Vedanta. Neelesh is adept at stirring business growth, driving efficiencies, building teams, and leading transformative change. Our next panelist for today is Amit Sachdeva, Chief Financial Officer and Head of Finance at Grofers. Amit has over 20 years of diversified leadership experience in P&L ownership, business finance, customer contracts and negotiation, business modeling and financial engineering for rightshore migration, financial planning and analysis, controllership and compliance, BPS operations, and cost optimization. His previous stint was as head of finance for Wipro Digital Operations and Platforms. Alok Patnia, founder and managing partner at Taxmantra Global, is our final panelist for today. Alok takes pride in scaling a firm that has helped over 40,000 customers globally in managing their taxation compliance, managing business incorporation, audits, and due diligence for startups raising external capital. The session for today will be moderated by Sonal Biyani, partner, Basic Roots Consulting. Sonal has over 12 years of experience in fundraising and M&A in public and private markets. She has previously worked at Axis Capital, Enam Securities, and Lehman Brothers in Mumbai. She currently runs a fundraise and financial services advisory focused on enabling early stage ventures to raise growth capital. I would like to thank our panelists for their time and consideration and also for giving us and the audience this opportunity to hear their insights. Another quick request to mute your devices and also if you wish to ask a question, do let us know via chat and please do mention the panelist you want to address the question to. Without much further ado, let's dive into the session. Over to you, Sonal.
Thanks, Shivangi, for that quick introduction and a detailed one at that in terms of all the panelists. I hope I'm audible to all of you. Is this good? Okay, awesome. So guys, like Shivangi sort of briefed, we are going to talk about how to streamline the finances, whether you are an offline business, online business, or whether you are an SME, etc. In India, especially, we are facing one of the longest economic slowdowns in the history, I believe, and perhaps at least the longest in the past 20 years, if I'm not wrong. Suddenly, things have changed really fast, and unfortunately for the worse. The pandemic has changed the entire market equation. We've had at least 70,000 people dying across the world, etc. The oil has hit low. A lot of things have come to a grinding halt, especially for offline businesses. Until yesterday, we thought that online businesses have a sliver of hope. But unfortunately, I think government also sort of announced that even online businesses will only be now able to deliver only essential commodities. Therefore, a lot of businesses, offline and online, have seen challenges in terms of how to manage the salaries, the supply chain, the costs, the unpaid, the receivables, etc. And therefore, the entire financial system, according to me, has come in for a great crunch. We'd expect our our panelists to sort of navigate through that and help us understand what they are doing or what is their idea of navigating this this pandemic. Um, my first question, if that's okay, is to Alok. Alok, we've seen that a lot of people, are questioning in terms of how to manage their finances, especially for SMEs and startups. They seem to face the biggest challenge. For large companies, also there is a challenge, but probably that gets mitigated by the scale that they have. But especially for SMEs who are driven by one owner or two owners and startups who are so lean already, how would they cope up with the concern of immediate financial liability? There's a liability in terms of salary, there's a liability in terms of paying to, let's say, server companies, etc., etc. So Alok, what do you think could be addressed, or how they are addressing all of this? If you could probably share your views on this.
Thanks, Sonal. So we have a very different world now, and we have to clearly work on our cash flows. For some time, we have to focus on cash flow. So as I say, cut the fat and preserve the muscle. So what do you mean by that? You have to do an assessment, internal assessment in terms of all of your costs and see which are non-essential costs. Can you cut down those costs? See which are the expenses which are essential, and how do you defer those expenses as well. So take benefit of all the government policies. If you have some loans, try to renegotiate with your banks and take the benefit of moratorium. Work on your cash flow. If there are employees wherein you can maybe defer some of the salary part, do that. What is more important for any business in today's world, Sonal, is cash preservation. And if you are able to survive next 6 months, and after 6 months you say that you have enough cash to grow, then you will able to grow, and you will to survive. So what is more important is to see that you cut down on cost, you cut down on things which might not be essential at this point of time. Those can be marketing, those can be some of your fixed costs. Talk to your landlord, see if you can renegotiate the rental. Just see that you are on top of the expenses. Work on the cash flow. I mean, in financial management, we have a saying wherein you say that when in trouble, just work on cash flow, and when you want to grow, just see that you are able to cut the fat and cut non-essential expenses. So that is very critical, because no one knows how long it will. uh, to our mind, this should last at least for 6 months. And if that is the case, it should not be a scenario wherein after 6 months you are left with no cash to grow.
Right. No, I agree. I completely agree. But and while preserving cash is sort of the mantra for the day, or for this time, I guess a lot of stress has been given even from the top leadership of the country to sort of keep preserving or keep taking care of the labor force that you have.
Mm.
Unfortunately, a lot of startups or a lot of SMEs may not have the bandwidth or the liberty to keep doing that. And therefore, to that extent, I mean, especially people who have businesses that are online but are offline centric. For example, I mean, if you look at what Neelesh is doing, or what Pepperfry is doing, a lot of those businesses are really dependent on therefore the kind of work or the kind of labor movement they have, and therefore can they realign that cost somehow?
Uh, so it will differ from business to business. As I say that you have to preserve your core team. So if you cut down your cost, and if you start laying off your core team, then also it will be a double whammy, because when you come back, you will take more time to stable and grow. So and if there are tough decisions, and if in your business, if it's the situation is that, then you will not be able to survive. Otherwise, if you don't lay off, or if you don't send people on leave or unpaid leave, then that's the tough call which you have to make. But ensure that you are able to retain the core team, so that when you are back, you are able to grow and you're able to sustain. But before cutting down on costs on employee, you should also explore other expenses, other overheads, because at the end of the day, you would want to retain your people. I mean, and see that other expenses can also be worked on.
Right, right. Neelesh, Neelesh, just wanted to understand your views as to how you guys are doing it. Pepperfry is largely an offline-centric business. Of course, a lot of most of the business comes from online. But how are you, or some of the businesses like you, would streamline this kind of cost expense?
Sure, Sonal. So we did take a very sort of systematic approach to this. Uh, uh, so I think here is the sequence of priorities that we put for ourselves. We said that the most important thing today is to ensure that people are safe, and that's really where we started our approach with. Our second priority was to ensure that we preserve cash. Our third priority has been to ensure that supply chain is protected. And honestly, our fourth priority has to be to protect demand. And that sounds very conflicting, but I can come back to that afterwards. But that's been the sequence that we went about with. When it comes to looking at our cost, we started with every sort of line in our cost structure. Okay, and I think there are various flexibilities which are available if we are willing to look through those scenarios. So to our rental, and as you called out, Sonal, we have about 40% of our business which comes from our offline studios. So to all our landlords for our studios, we actually went and served them force measure notices, okay, to avoid payment of rental during this period. And that's one opportunity which is available to you. So if your contracts have a force measure, then please invoke that. Okay, if your contracts don't have a force measure, there is something called as a doctrine of frustration. Okay, please check with any legal friend that you have, and your friend will be able to explain to you what does it mean. If you want, you can always write to me and I can guide you through that. But even if your contract doesn't have a force measure notice, you can invoke doctrine of frustration, okay, to start conversation with your landlords to avoid paying rental during this period. So effectively, one cost that we took out from our P&L was the rental cost that our business suffers. Okay. The other area that we worked with is we have got loans from Innoven, which is a venture capitalist lending organization. So we started working with Innoven right in the beginning, okay, to ensure that we get a moratorium on pay down of that loan. Okay, and that is something which has again come to the benefit because, as Alok rightly called out, it is deferring a payout, which is important because if you can come through this 6, 7, 8 months period, and if you have money in your pocket, then you have something to go back and fight in the business. And therefore, we started conversing with people that we owed money to. Okay, and that is the other benefit that we've got. The third thing that we have done here is we've literally gone about, as I said, every line of our P&L and therefore looked at every of our fixed cost structure.
Sure.
And we'll be surprised if you start asking people to help. People will be willing to help you. Everybody realizes this is a difficult time. Okay, everybody realizes that what we are looking to do is to start up new businesses, which is really a great thing that we are doing as individuals out here. Okay, and therefore you will be surprised how many people are willing to help you. So we've done conversation with our people who supply us tech-related infrastructure. We've done conversation with people who supply us with outsourced people-related services. We've done conversations with people who just simply provide tea and coffee in our offices. Okay, and therefore engage with everybody. Okay, that you regularly work with, and do those conversations. And you will realize that while everybody is in the same boat, this is the time when people are actually willing to help you out. And that's the other step that we've done in our business. The third thing that we've done, and I think this is again very important. Okay, at some point in time, this period will be behind you. Okay, so don't miss this opportunity. This is a time to actually start looking for things which will benefit your business couple of months down the line. So even as we've given force majeure notices not to pay rentals for the next coming month, we've started negotiation with every of our landlord, okay, to reduce the rentals cost on an ongoing basis beyond the next 3 months. And those are the negotiations that we're doing, which we know will benefit our business to the extent of 30 to 40% as we go forward, and as we get back to a place where obviously we're going to come back to.
Sure.
So that's the other bit of work that we started doing with, which is already to start thinking in more in terms of long term. So my sort of point to you, Sonal, and to this forum would be, uh, look at every line. Okay, ask yourself the question: what can I do about this cost? Don't hesitate to go and ask. There's nothing wrong in asking. Don't go and hesitate to ask. You will be surprised how many people are there willing to help you. Think beyond the immediate period, because this is actually also a great opportunity to get benefits which will stay with your business for a longer period of time.
It's interesting that you mentioned force majeure as one of the things. And I was listening to one of the panelists who's an expert on real estate, and he kind of mentioned that unfortunately a lot of companies did not pay attention to that and therefore could not invoke it. And I'm glad that you mentioned this, because I mean, if you've not done that already, maybe it's the time to sort of incorporate that, or irrespective of that, maybe go negotiate with people you've been talking to,
Absolutely.
right? So I hear you that, negotiation could probably be the key. The other lever that you mentioned was sort of how to increase the revenue, and I think if anyone will probably be benefited, if not benefited, I don't think benefited is a right word. There probably is not a positive word right now. But in terms of people who are still moving, for example, Grofers is still moving. They are providing the most essential commodities to people, etc. And therefore, I do wanted to wanted Amit to highlight as to how you guys are moving all of these supplies to people. What are you seeing on the ground in terms of movement of people, your staff, and these supplies? Are you seeing that there's a supply chain sort of obfuscation from the source? And if yes, then how are you managing it? If no, then how are you managing the whole payment cycle? How is that getting affected?
No, absolutely, Sonal. I think, thanks for highlighting that. I think the first thing I want to actually bring out is that we see ourselves on the other side of the road when every, business is actually struggling to keep up and running. We see ourselves as, or the online grocery as a tipping point right now in the predicament, because of the fact that, it has become more moral duty for us right now to actually continue to deliver groceries when people are actually locked down in their homes. So I think in terms of the business uh, sense, I think we've seen immense opportunities of people logging into our platform. So I think from a demand perspective, I think it has been phenomenal when people have been trying to actually order groceries online. But what it did also, it actually, with all the disruptions initially in the first 2 weeks, it put a huge strain on our supply chain. We've had huge issues in terms of our ability to continue to run our warehouses, because we did not have any contract labor being able to get into our warehouses. And secondly, our delivery boys, those warriors or frontline warriors who were not allowed to operate. So I think it was in the first 3 to 4 weeks, I think all I can say is it was like building up our entire supply chain from the grounds up, because if all of those people had either went to their hometowns or were not ready to come to the warehouses. So I think 2 3 main things that we did is obviously in terms of the safety and security of our people. We had to quickly put in huge amount of safety measures in terms of putting those thermometers, touchless thermometers, ensuring distancing in our warehouses, and also giving the confidence to those people that we will take care of them. In terms of the delivery boys, again, I think those are the ones, the real warriors actually, who are going out in these conditions and continue to deliver. So I think we've been very fortunate to have worked with the government authorities to be able to get to where we are today. We are still not 100% up and running, but I think the good thing right now is we're almost 90% of the cities we were operating in, we are back up and running, and we are trying to work with RWAs to make sure we do that. So I think it's a very different experience for us right now, especially at Grofers, because we find ourselves in the middle of a lot of activity where people are wanting to get their groceries delivered, and we were not able to do that. So.
Yeah, and I'm sure it's a function of a lot of external things really. Internally, I think it is also time for all of us to sort of realign our strengths, and also then also simultaneously taking care of the employees, because these are the people who are really, like you said, are the frontline warriors who are reaching out to people and taking care of their daily and essential needs. But at the same time, a lot of applications or a lot of apps or e-tech businesses have sort of, if not pivoted, but have opened their technology stacks to sort of add more services. For example, if you look at Swiggy, they've added, okay, do you want personal goods? We'll supply it to you. Do you want medicines? We'll supply it to you, etc. So while this is opening another war front in terms of Swiggy being a competition to people like Grofers or big baskets of the world, but at the same time, a lot of this could also be empathy driven. So, so really, this is probably a dichotomy between people focusing on their core strengths or really leveraging their platform to get more sort of things in the door. So and that brings me to my next question to Alok. Do you really think this is a time to focus on your core strengths? Should you look to explore new features, new avenues, or is it just important to sort of focus down and say that, okay, this is what my core strength is and I will continue to do this?
So, Sonal, it depends from a business which wherein you are in. For instance, you rightly gave the example of Swiggy, and Swiggy, their core strength is to deliver food, but they took this as an opportunity. I think opportunity is the wrong word, but they took this as a chance to see whether they can add grocery also to their delivery. So, what is more important at this point of time is do not overcommit on additional feature development. See if your current logistics and current value chain can be used to add more features. Uh, because don't try to add or try to develop something which you will not be able to taste quickly. So I think if you're able to taste something, say in next 40-45 days in the current situation, then it makes sense to develop that feature. However, having said that, there may be businesses which might want to repivot and focus on areas which will give them benefits down the line. So the to summarize this, it's important that you assess what is your current logistics and current power strength, and then see whether you can add some features which can create additional revenue and which can also help you in the current situation. So I think that's a critical part. Don't try to get into a new feature altogether which might not give you revenue and might burn capital at this point of time.
Yeah, probably it also depends on the kind of how well funded you are in terms of the kind of cash that you are sitting on, but also brings us to a
So
pertinent.
so just I just wanted to add one point.
Sure.
So what demonetization was for Paytm, I mean, COVID-19 is to all the groceries thing. But you rightly said that it also depends how well you are funded and the kind of cash you're sitting on. So you cannot just go and burn everything because the situation is very different and you don't know what's the timeline of this, and it's more of a fear of unknown. So we have to see what is our strength at this point of time and work around.
Right. And to add to what you're saying in terms of, even though you are sitting on a pile of cash, and if you're fortunate enough to have, let's say, a runway of more than 12 months with that amount of cash and the initial planning that you had done, I think it is also important to sort of save those marketing dollars and not kind of burn them away in terms of new products or products which are already existing, right? So again, to my questions to Neelesh, in terms of how do you really plan this entire marketing spend that, let's say as a company one would have planned for. This is a very weird situation where that I still need to keep showing my face to my customers to say that, hello, I exist, I'm still here. And also, while knowing that I probably I will convert those customers, right? So your CACs may just go out of the roof, and therefore, uh, what according to you should be like a fine balance of spending those marketing dollars?
Yeah, I think it's a fantastic question, Sonal. Uh, and I think there is really a challenge for some businesses to stay, if I could put it this way, relevant today in context of what's happening externally. I think in my wisdom, a Swiggy doing grocery uh, uh, is still in an aligned space. A no broker doing grocery, okay, is far apart. Okay, but that's the need to be relevant today. If I go back to what I originally spoke, I said are actually from a business point of view, our fourth priority is actually demand creation. Okay, and that just brings me to your point around therefore the marketing dollars. Okay, the reason we say this is because uh, I think what all of us know is that pan India supply chain is disrupted. Okay, and if you really look at India, then FMCGs have always had one of the best supply chain running in this country. When I worked with Hindustan Lever for 18 years, and I know the might that across India FMCGs had. And if FMCG supply chains are disrupted, then we can all be sure that in whatever business we operate in, our supply side is going to see challenges in the next coming months. The positive, however, on the supply chain side uh, is the fact that we are a poor country, and effectively in a matter of weeks, if not days, everybody will have to go back and fix their businesses, start their trucks, and start moving all over again. And therefore, the supply chain challenge will get overcome in the next couple of months. Okay, at the outermost side. I think the demand challenge is something we don't really know about. Okay, this is really where we are in that completely unknown territory of not knowing how soon will, let us say, the malls open. After the malls opening, how soon will people be wanting to step out of their house and go out? And after people are willing to go out, how soon will they be wanting to spend money on first non-discretionary item and then discretionary item? And therefore, we are all in a zone which is absolutely unknown. My sort of two bits on this one would be look for leading indicators. Sales is a lagging indicator. Don't look at how much did you sell. That's not going to be able to help you allocate the marketing money that you have. And therefore look for indicators which work for your business to give you what is going to unfold based on the leading indicators that you have. I think as on today, one of the most important leading indicator which is available to us is the work that CMIE has done in terms of how are people approaching their life. There is the entire consumer sentiment data which is available with us, which is already speaking about the fact that for the next 9 months, people are not thinking about non-discretionary spends. Sorry, are not thinking about discretionary spends. Yeah. So look for leading indicators. They will be different for your businesses, but start there. Okay. Wait and hold back till the time the ramp up comes. Don't throw dollars ahead of time. You're not going to get returns on your money. And therefore, wait for the early sign of consumers coming back, of demand picking up, and only then put money. Okay. And the third point that I really have on this one is please don't get carried away by macro data. Okay, everybody is today looking at the macro data and everybody is sitting on a position of saying the whole world is collapsed. Please look at micro data. Look at what impacts your business. Okay, here is my hypothesis when it comes to furniture. Okay, after today, okay, I don't think anybody would want to have a carpenter sitting in their home making a piece of furniture for them over 4 weeks. It's not going to happen. People are going to be cagey about bringing in a third party who is going to be spending 8 hours in a day sitting in their house. And therefore, somewhere Pepperfry has to get benefited by this change coming about. Okay. And therefore, looking at that micro data is important. What is happening to your specific TG? Okay. It is not that because there is a migrant crisis, anybody who's a middle class plus is also going to be out of money soon. They're still going to be having money, and these are the consumers who will come back and start purchasing at some point in time. And therefore, let's not get carried away by the macro sentiments. Please look at the micro data. Understand this is actually the time to go back and understand who your TG is. This is the time to go back and pick up your Kotler and go back and understand the 6 P's of marketing and which are the 6 P's of marketing which impact your business the most. Okay, so go back to basic, understand micros, and allocate dollars only when you have done that study. So that's really where I come from. Don't rush, don't get carried away by macro data. Look at micro data, understand your TG, go back, pick up your Kotlers. This is the time to understand which are the piece which is going to impact your business most, and then play with those
It's a
levers.
beautiful insight, Neelesh, when you said that you will not have a carpenter sitting in your house. And that's probably true for all the labor intensive industries going forward. And as much as we would love to sort of have that bed made in front of us, I think it's probably not going to happen for a very long time for a lot of us. Which brings me to the question of planning the inventory, right? Like you said that you look at your matrix and then you decide how to do the entire planning in terms of inventory management being one of the indicators, I would presume. And therefore for people like you where the demand will resume once a lot of these things settle down. But for someone like Grofers, I guess the inventory management is getting more and more critical as we move forward, because you do not know how your supply is getting affected. The definition of important items is changing. I mean, my shampoo bottle got over and I wasn't sure if that's an essential commodity, right? Like I really don't know. And then so a lot of that demand planning is also a challenge for a lot of new businesses and startups. And my question to Amit is that how are you sort of at Grofers doing that entire inventory planning, and going forward also, how are you envisaging the demand to change? Is there a lot of pent up demand that will come out? And again, how are you guys planning around that?
I think first thing, Sonal, in terms of inventory, uh, the most critical thing when people got caught off guard in the entire lockdown situation was a lot of people did were not uh, at least stocked up for the basics, so the staples, the pulses, rice, wheat, flour, all of that, so I think so for the first thing that we did was actually move to a very basic SKU based on our app. So while we at any point of time we would have 3,000 SKUs, on our app, what we did is, we actually moved down to a less than a 1,000 SKU, on our app, only for people to give them the opportunity to stock up on the initial days. So for the first 2 weeks, uh, we actually were running on a higher DOI on some of those non-essential items, but in terms of some of the staples and things that people would want to stock up on the dry grocery side, what we did was actually increased our inventory significantly higher than what we typically we would want to. Obviously, we were running on a lower DOI, but in terms of the absolute dollar value, we were actually we went with a higher higher inventory on some of those items. But I think as Neelesh mentioned, I think I totally agree that FMCGs have built the strongest supply chain in in this country, but still their supplies were disrupted, which meant that we were also impacted by it. The good thing is we work with a lot of our private brands, all these own brands that we've built up over the last 3 to 4 years, and we actually help them create their logistics and transportation in terms of getting those things back into our warehouses. So I think that was a big thing that helped us. Uh, Talking to those vendors in terms of giving us a longer payment term, I think that was the first thing that we reached out to them. And in spite of those guys having challenges on their working capital, they were very forthcoming, especially on the fact that we were trying to at least get to a channel where people were wanting to get groceries, which was not available initially during the lockdown, till the time the government actually stepped up and ensured that. So I think I agree with you. Inventory management was a big, ticket item for us as well, in terms of ensuring availability. Because if you sign up on an app and you don't find anything to buy, it just defeats the whole idea of, enabling, what people want at that time of the need, actually.
Yeah, absolutely. In fact, I was reading a very interesting article and it said that all the app interfaces or the UIs of different apps in different countries is so different. In India, you are saying, okay, you know what, you guys are safe if we deliver. In Singapore, there was no mention of safety at all because the government has sort of controlled it so well. So I think that messaging from e-commerce companies, especially grocery companies, is so important. Interestingly, I think even though a lot of hope is there that we've been able to contain, or at least have shown the strength to contain this disease, I still feel like that investors, especially VC investors, have not come around of making a thesis as to how this entire pandemic will move, and therefore a lot of funding has dried down. A lot of dry powder which the investors are sitting with is probably going to go with their existing portfolios, or at least or if not, then I think a lot of it will be wait and watch. In fact, I was reading somewhere someone said that revenue is the new funding, get to it. As long as a startup you can show that I will get revenues, I think that's the time you will also see a movement of funding. I mean, I advise a lot of startups for their funding, and we've seen a definite dearth of people who are willing to say that, okay, you know what, we will probably cut a check for this sector, let alone this company. People are not even discussing that, and therefore funding has definitely dried up. And sort of wanted to hear what Alok has to say in terms of how does he see the funding space. And Alok, this question specifically for SMEs. I think for startups, it is anyway a game of high risk. But for SMEs, which feed lots and lots of people, millions of Indians, I think funding is going to be a huge challenge, especially, I mean, we already have had an NBFC crisis, and now after this, SMEs are still going to see a huge dry up of funding. How do you think SMEs will react, or what kind of measures do you think we can take for them?
So let me just talk about little bit about startups, as you said. So I was talking to a few of the VC investors sometime back, and the the main summary they have, or the main advice they have, is that if you're able to survive till 31st of March 2021, then on 1st April 2021, come and talk to me. So this year, most of the investors are not willing to initiate a new discussion. As you rightly said, that they are preserving cash for their current portfolio company. And for startups, if you are if you're a revenue stage, then you should try to survive on your own and try to see if you have raised angel fund, then you should try to talk to existing investors rather than going to a new investor. Addressing to MSME specifically, Sonal, so there are different uh, options which SMEs would have, MSMEs would have. Government, in that way, government is little lenient in terms of how SMEs can raise funds. For instance, there is a scheme which has been announced by SIDBI some time back for MSMEs, and there are different moratoriums which government has given at this point of time. There is a extension of NPA norms from 90 days to 180 days. RBI is giving clear signals to banks that you should try and renegotiate, restructure the loans, the term loans, if it's possible. They have given a lot of RBI has given a lot of relaxation to NBFCs also, wherein they have told banks to consider even NBFC loan under moratorium. So my one piece advice to MSME would be to go and talk to your banks. There are schemes, for instance, it's very easy to raise capital or raise short-term or medium-term loan on your GST filings. I mean, that's very easy. Most of the banks is giving you. Banks have also been told by RBI that relax the norms for working capital. So working capital is mostly 25% margin on which they work. So 25% of the working capital requirement is to be brought in by MSME. So there is a relaxation by RBI saying to the banks that you can relax that, because the working capital requirement will increase because customers are not paying, and you will continue to have most of your expenses and your employee payment. So I think there are schemes. You have to talk to a bank and see that you are able to. In fact, SME having revenue is in a much better situation than a startup pre-revenue, because with revenues, banks are willing to help at this point of time. Uh, yes, it differs from bank to bank, but there is a clear guidance given by RBI at this point of time uh, to lend more to SME.
Got it, Rahul. I think we actually have a lot of questions from the audience, and just keeping our time in the light, I would like to sort of bring those questions. Neelesh, there is a lot of curiosity around your suggestion for using force majeure clause, and also if you could sort of give a little color to how this can be used. If it is not there, then can it be incorporated now? And also, if you could explain a little bit on doctrine of frustration, a lot of people wanted to know that.
Sure. So force majeure is effectively a clause which is between two contracting parties. So if it is not existing in your agreement, unfortunately, you can't use it. Okay, so that's the bad news there. It is not a legal provision if it is not already existing in your contract. If you modify your contract, it will only be prospective. It can't be retrospective. In today's scenario, nobody will anyway, the counterparty will not modify a contract retrospective because obviously they are going to be losing out. Okay, so any modified contract can only give you benefit, which is going to be prospective. At this stage, it may not be worth the effort. Given what's happened around, the counterparty probably will not want to engage also with you on structuring and wording on force majeure. Yeah. So I would probably not go and spend energy trying to modify your contract if it is not existing in your contract. There is something called as doctrine of frustration. This is under the Indian Contract Act. This is not necessarily about one-on-one contracts, and therefore it has a far broader application than the individual contracts that you could have. Okay, it is, however, not a very straightforward provision. These are all legal bits, and therefore it is not a very straightforward given benefit to you. My recommendation or the way doctrine of frustration works is to say that I have a contract with you, but there are circumstances which have happened which has frustrated my ability to honor the contract. Okay, I've just tried to make it simpler. Okay, it's not exactly that, but that is where it comes from, saying that I'm unable to honor my side of the contract, and therefore the circumstances have become frustrating, and therefore we need to rethink this contract. Okay, that's the way you can think about it. Okay, my point of view, again, my sort of two bits of comments here would be, uh, if you were to choose to use the doctrine of frustration, okay, use it to open a door for you to start a conversation with the other party. So let us say you're on a rental agreement and your contract doesn't have a force majeure clause in it. Okay, use the doctrine of frustration if your landlord is not even willing to get into a conversation with you on rental payments and reduction in rental payments. And when you are able to use that to open the door for you, okay, it is then your ability, how much are you able to negotiate with your landlord in this instance. Okay, so that's the difference. A force majeure clause is in your agreement. If it is not there, sorry, it is not there. Even if it is not there, don't, in my opinion, don't waste time today to try and incorporate it. It will only be prospective, and the counterparty should be willing. Doctrine of frustration is more under the Indian Contract Act. You can use it, but it is not so straightforward, and therefore it might just be an opening to get to a negotiation where you can get some relief out of the counterparty. That's the way I would think about it.
And just to add to that, I think the best option is to go and talk to your landlord, because they are willing to help in most of the cases. I mean, at times when you are at a startup stage, it doesn't really make sense to get into a legal thing. Just talk to them and see if you can get that benefit from your landlord directly. If you do not have the force majeure clause in your agreement, that also helps.
So therefore, negotiate, and see if you can get them to sort of come around the clause, the terms maybe. The next question is sort of a question which is open to the panel, but I guess Amit, you're the best person placed to deal with this, because people want to know how do you see automation and messaging, or which is basically your messaging as a company, which will play a huge role in the COVID scenario as well as post-COVID scenario. So how will you see automation changing your business dynamics? and the messaging that you are sort of reaching out people with?
No, absolutely. I think automation, we see, automation as a big impact for us, learning from the COVID situation. The only thing I would be careful about right now, Sonal, is, automation also comes along with a Capex heavy investment, So at this point of time, I would rather go for, easy wins in terms of what, the kind of productivity that we want to drive. And one of the great examples in our case has been the lack of availability of a manual or contract labor once the lockdown happened. So I think one learning that we are also taking away from this situation is drive warehouse automation at a much faster pace. Once the first opportunity arises to us, once things are normalized. Because right now, if you were doing a very simple metric that we target right now is orders processed by for each person in our warehouse. So if we are doing 12 orders today, and we've been thinking of incrementally bringing up to 15, for us also now the focus will be how do we think out of the box and actually take that 15 to probably 40 or 45 rather than incrementally bringing us to maybe 14, 15, 16, 18. The second level of automation that we are a tech first organization, and we put a lot of focus in terms of developing microservices that actually run on our app. So I think we are also now planning to start investing a little higher on the technology side in terms of automating some of the processes in terms of predicting demand ahead of supply. And I really like what Neelesh earlier said in terms of going after leading indicators and not looking for lagging indicators. So I think from that perspective, obviously automation will be a big thing, but I would say not in the near future. Right now we are wanting to build capacities to deliver more orders rather than actually allocating capital right now towards that.
Got it. But unfortunately, I think a lot of people are expecting that there will be a mass exodus of migrant workers who are the backbone of most of the SMEs and most of the businesses really. I think basically they are waiting for the end opening up of the lockdown. And when that happens, I think a lot of people will go back home and there will be a dearth of frontline workers. And if you think there are any ways of sort of circumventing that, if any of you can sort of throw light on that. My personal opinion is that if you're able to sort of give or derive comfort, give comfort to your employees or those workers that when things normalize, your salaries will be taken care of, your health will be taken care of, etc. I think that's one way of doing it, but happy to sort of if you guys could share your views on how that can be prevented. Our audience really wants to know that as well.
Sure, I think I can go first, Sonal, because I think we were in a very peculiar situation where we actually wanted contract labor and we were not getting any. I think some of the other people on these forums might have found themselves in a different situation where actually they would have had excess labor and then didn't know what to do in that situation. So I think the first thing that we did was to reach out within our ecosystem. In terms of, companies, especially who were within our warehouse vicinity. A lot of those people were very forthcoming in helping us at this point of time. I think we've had help from, industrialists, a lot of, people who are running factories and who said that, we didn't even have to pay anything to the labor because as per the government regulation, those industrialists were already paying or they were mandated to pay to the labor, and they said, all we needed to do was arrange transportation for, for them to come from their, factories to our warehouses. I think that was a big thing that, helped us in, all we did was investing in training for those semi-skilled people and actually getting into our warehouses. So I think people who find themselves in that, situation should reach out to, everybody in their ecosystem, and I think you'll realize that people will be forthcoming in wanting to help, because it creates, employment. It helps those people in terms of, when they are not able to give them gainful employment.
Yeah, absolutely, absolutely, and I think it is therefore most critical for us to sort of retain and give comfort to those migrant workers, and that probably will also define how your business shapes up. But in terms of skilled force, which probably is sitting on the fence, where at one side you've already given them the salaries, and on the other side, if there is a 10% sort of hike offered by another company, they'll probably jump ship. So, and you can't really blame them because that's how it works. But a lot of people also wanted to know how can this be tackled by using sort of ESOPs or any other internal measures, etc. Alok, I think if you could give a little light on how people could structure ESOPs for their particular companies, that will be awesome.
Sonal, so one of the ways wherein we can retain quality people is that uh, we can defer their salary and maybe convert those salaries into ESOPs. Uh, and it's all about all emotional factors point which comes in. If someone has to go, that person will go. So you really can't stop someone from leaving your company. But ESOP and other factors like health and giving that confidence from the CEO that if there is a salary cut, first I will have the salary cut, and then that's the last point wherein I will ensure I will see that the salary cut is done by for from employees. So I think ESOP plays one of the role, but it's not the only thing. ESOP has been there for a long period of time in India, and Amit and Neelesh will agree that ESOP has not been a very great factor in Indian startup context because of the laws around ESOPs and tax laws around ESOPs vis-a-vis other countries. But I think more than ESOPs, what is more important is that confidence and the comfort level which you give to your employees to say that we will all come out of this together. And if there is a salary cut, I as a leader will first take, and the management needs to set the right uh, signal by doing what they first do, and then directly going and cutting the salaries. So I think there are many other factors in addition to ESOPs which will also play a big role, because uh, this is more of an emotional thing which we are going through. Even for migrant worker also, why if they are returning back home, and it's more of an emotional reaction which they have because they have panicked. They don't know. It's a fear of unknown. They don't know what will happen. I was listening to one of few of the migrant workers, and they were saying that if they have to die of the disease, they better off die with their families in villages rather than be in the city. So I think uh, when this we will come out of this situation, and they have no option but to come back to the job and go to cities and get the work because they don't have any work in villages.
Absolutely.
So it's more of a emotional and more of a emotional management, and how do you keep everyone together is what is more important at this point of time.
Yeah, so I
So
think we are all focusing on a lot of levers, including supply chain, inventory, HR issues, health, everything. I think all of these need to be taken care of by the management. I am looking at the watch, and we are probably at the fag end of the discussion, but I do want to take up one question which a lot of people have asked. Nilesh, this is specifically for you. People have asked about what are the lead indicators that they can manage, that they need to monitor for their industries. And Amit, if you would add to that, because a lot of people who are into groceries are also asking these questions. So if Nilesh, you could take it first, and maybe Amit, if you can add to that.
Okay, so this is it's difficult to generalize when you speak micro. Okay, so let's first of all appreciate that
Yeah,
uh,
sure.
uh, because it's micro because it is relevant to you and we can't generalize it. Okay, so that's I'll
Of
just
course.
caveat my explanation by that. I'll try and make it a little more practical using my business as an example point, and then you'll have to sort of figure out your way around your own respective businesses. Okay, so I'm into a discretionary consumer product business, Pepperfry. So we sell furniture online, and therefore my typical buying cycle in the past before COVID has been on an average between the time a person comes online to Pepperfry and an order is placed, it is 3 weeks. Okay, we are speaking about a product which on an average costs $200, and therefore this is, let us say, sorry, unlike my lucky colleague out or my lucky co-panelist Amit out here, okay, where orders get placed in a matter of minutes. Okay, it takes 3 weeks for a consumer, okay, to typically buy into my category. So that's the difference with my business. Okay, so what are some of the leading indicators that I would look for? And as Amit will follow me, I'm sure they'll be very different for his category, which makes the point that micro indicators are going to be different. Okay. I think one of the first lead indicator that you will of course look for is what's happening overall in the discretionary bucket. And this is not about furniture. It could well be, are people buying TVs? Are people back to buying refrigerators? Okay. So it is not overall Indian demand. Okay. I'm now getting zooming into products which cost 20, 30,000 rupees. Are people back to buying that? So that's one sort of sliver of information that I'll look for. Okay. I'll then look at what's happening to, let us say, the footfalls in big malls. Okay. That data is available in marketplace. Okay. That data you can get from your landlords if you talk with them. Okay. And that therefore gives you an indication of, are people coming back into malls? Now they may not be coming back to buy furniture, but so long as they're walking into malls, that's an indicator for you. Okay. I would then similarly look at data which is available from Google in terms of what's happening to buying in search interest for furniture. It is not even buying furniture. It is just, are people searching for furniture online? Okay, the fact that they're searching for furniture online would mean that at some point in time, they'll start looking at some of the website which are going to sell furniture. So what's happening to the interest trend on furniture online? Okay, that is something that I would look for. I would then look for what is happening to traffic overall. Is overall internet traffic going up? Is overall internet traffic going down? Can we cut this traffic by what is going towards the horizontal, what is coming toward the vertical, what is going towards finance, fintech, and therefore can you again get into a sliver of data which is relevant to you? I will then look at what is happening to my own traffic, and I would cut it by what's happening to what is coming organically, which means I don't pay for it, and what is coming inorganically, which means we paid for it. So I'm saying there are multiple ways in which you should be able to cut data which is relevant to your category, and therefore be able to make a judgment of, is the demand pattern changing? Are more and more people showing interest? How soon is the interest converting into something far more tangible? And therefore how much is it converting into sales? Okay, if you rush with early set of data and start buying inventory too soon, okay, you're going to be saddled with inventory. Worse would be, you'll be saddled with wrong inventory. Okay, not just inventory, wrong inventory, which is even worse place to be in. Or you would be starting to spend your marketing dollars too soon if you just want to go by headline numbers. For instance, today if you look at internet traffic online, it is up. It's up because people are either buying grocery online or they are on OTT platforms. It has nothing to buying furniture. Okay, and therefore don't
Absolutely.
get carried away by micro information. Cut information and look at what is relevant to your category. Amit, over to you.
That,
No, absolutely. I think Neelesh, those were the, probably in the normal days, we would look at, and most of the people on this forum would also agree that GMV is probably the leading, indicator that anybody would use. I think we would use GMV as, as one of the leading indicator. Probably, DAOs or MAOs on our platform, Google keywords, in terms of the people searching on. But those were like, a situation, probably a pre-COVID situation when everybody was following demand. For us, what has totally changed now is, we are now tracking a leading indicator on the supply side, in terms of the total number of orders that we were able to process from our warehouses, total number of orders that we were able to get billed from our warehouses, total number of orders processed or delivered by our delivery boys. That is a leading indicator for us, because that is, that will give us a real factor in terms of how good have we been. And if that number, in spite of the challenges and the disruptions, keeps on going on, then we know that, we are actually not lagging behind demand, but catching up with it, and I think most important, factor for us, or leading indicator or lagging indicator, is cash in our bank, So I think that is one thing that I personally, check every day in the morning and in the night before I go to sleep. So I think most of our, startups used to be GMV and revenue. We were falling after that, but I think what I keep on telling my team right now is that, revenue is vanity, margin is sanity. And right now the cash is reality, So that is the motto that we all are living right now in terms of, preserving cash. And if you have more cash end of the day than what you started, I think that is a leading indicator that you want to follow actually.
Thank you,
Amit,
Amit. That was very informative.
Amit, one of the good things about your business is that you do not have a challenge in collecting money. So whenever you supply, you get the money.
Correct. Actually, we
Absolutely. And I
stopped
guess,
COD. Yeah, we stopped COD, Alok, because of the risk in terms of carrying, the inspections because of the currency. So I think it's been a big tipping point for us also in terms of, 50% of our platform, housewives and, women who used to use our platform by using cash have actually also now moved to using Paytm and other.
Maybe because of their husband staying at home and they're helping them now.
Correct.
absolutely. So I think a lot of the entire discussion sort of agrees to the fact that a lot of habits are going to change. This is a tipping point for a lot of businesses. And at the end of the day, if you have cash in the bank, you should be okay for a while, as long as you're able to streamline your inventory, supply chain, labor, and obviously managing all of this through a financial lens. I think it was an extremely informative conversation. I'm sorry I was not able to take a lot of questions, but I tried to sort of assimilate questions from a lot of people and ask questions that were asked by a lot of people. Over to you, Shivangi. If you do want to highlight something else, sort of happy to discuss it with the panel here as well.
So I think we're almost at time out. So thank you, Amit, Alok, Neelesh, and Sonal for this discussion. And especially to the audience, the members and my team who have been collating it silently in the background. The next session of MA Reboot, Navigating the New Normal, is on crisis-sensitive marketing and brand relevance. It's tomorrow, 21st April at 3:30 p.m. I request all of you to log in so we can continue this discussion and look at another aspect of together navigating all our businesses through this current COVID crisis. Thank you, panelists. Thank you once again for taking time out and sharing your insights with the audience.
Thanks.
Superb. Thanks.
Thanks so
Thanks,
much.
everyone.
Thanks everyone. All the
Pleasure
best.
to be here.
Stay
Thank
home,
you.
stay safe.
Take care.
Yeah. Bye bye. Thanks.
Bye.
Bye.
Bye.